Good afternoon, everybody, and welcome to this edition of ThinkTechnical for Wednesday, 2nd December. My name is Carl Capolingua. I'm the market analyst over here at ThinkMarkets, and it is a pleasure to be your guide on everything technical for the next 15 minutes or so at least. Before we get started, though, the ThinkMarkets difference is substantial. You get $8 flat rate trades, your own holder identification number, and unlimited phone support. So before your next ASX share trade, make sure you think markets. The agenda for today's session is to have a look at some of the key macroeconomic charts from around the world. We'll bring it closer to home and have a look at the Aussie market and then some Australian stocks of interest. But today, I thought we could start off looking at Bitcoin. Certainly has made the news recently. I'm starting on a weekly chart so we can zoom out and see, I guess, the scale of the recent move within the context of, the broader history. So we have had this huge move up here. It was all the rage back in 2016, 2017. It made that huge blow off top and then has been ultimately consolidating since then. And we're looking to nudge through the top of the range. In fact, we have actually taken out that December 2017 high of 19,351. Now, we joined the Bitcoin story very recently, and I'll show you. It was just looking at a break of this 2019 high of 13,842. We'll go back to the daily chart, and that kicks in around here. And this is where I started to cover it for you in ThinkTechnical. I tipped it would go to that all-time high, which it has. It took it out first at this 19,495. There's about a 13% pullback to 16,198 and then hitting 19,887. So the problem, I think, for Bitcoin at the moment, and I think it'll be a short-term issue, is this psychological resistance at 20,000. Now, there's no real reason why 20,000 should create a demand or supply sort of event in the market, but just the magnitude of that number, I think, for a lot of investors, let's face it, if you got in at 10,000 and you're thinking, where would I love to get out? On the day you got in, you'd be thinking, oh, geez, if I got to 20,000, I'd be out of here. And, if you got to 15, you might have been thinking of 20. Hey, if you got in at 18 or 19, you're probably thinking 20 as well. So what that does is if everybody's thinking of supplying at 20 and it happens, the demand that's in the system, and there is plenty of demand in the system, we know that because look at the short-term trend, look at the long-term trend, there are these green zones here, plenty of demand in the system. But when that demand is there, it hits the supply, and then we get a bit of a pause in prices. And I think that's what we're seeing here in the short term. So it takes time to work through that supply. The only way to get rid of the supply is to trade with it, is to give those people who have Bitcoin cash to get them out and away from that level. If there's enough demand in the system, we should blast through it. So what does that mean for Bitcoin? How do we trade it? I think you've got to be fairly neutral while we're in this process of dealing with that 20,000. I have said in the past, look, when it gets to that all-time high, you'd sell 75% of your position and keep 25% for who knows what. I'm still happy with that stance. So if you're still holding on to 25% of your position from my prior call, I would hang on to that because really you're so far ahead, you're probably not going to lose on this trade anyway. Stops, you can put stops sort of somewhere under here if you like, and you're okay. You're holding on for the next phase. If you're not in it, Bitcoin's not much of a spectator sport, is it? What would you do? Well, I think you can, a couple of things. You either have to wait for a break of 20,000. And in that case, I'm actually probably not a buyer on a break because I think there's the chance of a false break, a pullback, and some mucking around to really get through this 20,000 level. So if that's the case, I'd be waiting for a break of 20,000 and a pullback to 20,000 and to see a price action signal there, which would be, for example, if you're into Japanese candlesticks, it'd be a candle with a very small body and a long lower shadow. So that would be a doji sort of candle. And if you saw that at 20,000 after the pullback, that's when you'd be looking to get in. We'll call that scenario one. Scenario two would be a pullback into the 17,000. So we haven't broken through 20 yet, and we are getting ready to use a higher launching base to do that. So 17 to sort of 16,198 as the downside there. Anywhere in that zone with that same sort of price action signal would be the place to get involved. So I've given you a couple of pretty clear-cut scenarios to look out for in terms of Bitcoin. If we don't see either of those, then you don't need to be involved, in my opinion. Okay, let's head back to equities land, and we'll kick off with the S&P 500. So that's the benchmark index in the USA. It has broken and closed at a new high as of yesterday's session. I would say, though, the price action from yesterday was a bit disappointing. So typically when we are breaking to new highs, we would expect lots of demand to come into the system and to stick, for that demand to stick. It didn't happen last night. We closed quite a ways off the highs, and that tells me that there is either not enough demand in the system, there's not enough positivity about what's going on in the world right now, or there's some sneaky supply out there looking to batter, take advantage, pounce on top of that demand, which you would expect from the breakout. So either way, it's not good, and either way, look, it's a very short-term watch negative, but medium to longer term with our trends definitely pointing in the right direction, you have to remain bullish. So don't take anything I've just said as a reason to go off and sell all of your holdings. It simply means we have to be a little cautious in the short term, and we will certainly keep a very close eye on the price action. For the S&P 500, the Nasdaq is looking a little better in that it has moved well above its 12,000 to 12,100 resistance zone. And more importantly, I think we've actually seen that zone act as a support point. I talked about this on Bitcoin. Once the key level is broken, we then want to see it act as a support point before we get involved for the next leg up. And that's what this candle is here. I mentioned that sort of that doji candle with the small body and a long tail pointing down, if that was a candle. I'll use bars here just simply to present a lot of information in a narrow window that we have available to us on the chart. But if you like candles, certainly go for it. That's the sort of signal we need to see on Bitcoin. It's there on the Nasdaq, and that makes me a little bit more positive. Not great price action last night, so very, very short-term negative watch, but otherwise the trends are still looking fantastic. Helping is a downtrend in the VIX, that's the volatility index, or otherwise known as the fear index. So, the fear of the unknown is slowly ebbing away, and that's a good sign. That's a pretty key psychological level as well. We've been in a range from, say, 20 to 40 post-COVID. The pre-COVID range was sort of more 10 to high teens. If we get below 20, that would potentially signal a move back into that more stable range for investors, which would be welcome. Another one here to look at is the Shanghai Composite. So this is the main Chinese stock exchange. That's a close of yesterday. Today it's about flat to slightly up, so not much of a difference, but looking very, very good. And it's a great basing pattern and about to break through the top. That's all pretty straightforward. If we look at the weekly chart, though, get some idea of the scope of this potential move. 35.87, 36.85, I should say, potential upside targets. But I think if you measure this move here, so that low is, let's call it, say, 26.50 into 34.50, so that's 800 points, and then you push that off 3,200, you could get a target into 4,000. Few ways to play this on the Australian Stock Exchange, and we can do that using exchange-traded funds. So they give you a basket exposure to potentially China, but a lot of the ETFs I'm about to mention also have some exposure to other Asian markets as well. But Asia, so ticker code ASIA, that's the Tech Tigers ETF, certainly one way to go. IZZ, that's more of a China-specific one, and then VGE, which is got emerging markets on the label, but it's largely focused on China. So three interesting ETFs there, which if you're interested in trading that one, you can have a look at. Let's bring it a little closer to home. We'll have a look at the Aussie market. So no harm looking at the weekly chart there. Again, if you want to measure moves, this is a pretty big move in here from 4,400. If you measure it from, say, the bottom of that range at 5,700, what's that, 1,700 points, where we could see 7,400 as the big picture target. That's pretty big picture. Let's have a look at the small picture. For the time being, it is definitely short-term uptrend. That's very clear. The momentum is good. It is waning a little, but not surprising given the strength that we've had. I would be expecting some significant support to kick in between this sort of 6,400 to 6,500 level. That's where the short-term moving average or dynamic support zone, as I call it, will be. 64.71 on the static and 63.77 are also there in that zone as well. So this is the support zone. A couple of scenarios here. It's interesting to see how we've responded today. If you looked at all the headlines, you read all the newspapers this morning, you would have heard about records in the US. But if you could read price action, you would understand why the Australian market hasn't responded to that today. So, traders respond to price action, to supply and demand, not to headlines. And I guess that subdued performance really, despite the records last night, has caused us to be rather subdued today. we could see continuation of this short-term downtrend into that zone and then a push off. And again, I'd be looking for that key price action signal in here. That would be, say, scenario 1. Scenario 2 would be, we actually solidify this little trough here. I'll give you the number, that low there at 65.11, and we don't get that broader pullback, and we just push through 67.14. Either way, I think we are going higher. It would be nice to see this long-term trend turn up, as I think it will in the very near future. In terms of ASX sectors, one to look out for today is the materials sector, which I think is starting to look very, very good. So, it has also had that large basing pattern. It's not dissimilar to that Shanghai Composite chart. It makes a lot of sense when you think about the impact that China and the Chinese economy has on this sector. So if we get that breakout in Shanghai, maybe we're going to see commensurate move here in the materials sector. So definitely keep an eye on that. Short-term uptrend is up, long-term uptrend is up, and we've seen that hold of that support zone in the long term. That's very important for me. And you can see in the past where it's held. Doesn't always happen, of course. You can see one time here it broke down, but in the short term, medium term, I'd say, this is looking pretty constructive. Why? Well, let's have a look at some of the reasons why. So that's the aluminium chart. Now, these are end-of-day closes from the London Metals Exchange, so they don't have open, high, low, close data. It's just a spot fix. Looking very good. And we're just looking at the shapes here. Don't worry if the last little blip is down. We're just looking at the broader shape. So giving an idea of what potentially can drive our material sector higher. That's iron ore. That's a big one, of course, BHP, Rio, Fortescue, etc., etc. Nickel also looking pretty good. A couple of days of softness though. Lead spiking. Tin looking very solid. Zinc spiking. And maybe for something like BHP, West Texas Intermediate Crude also moving higher. Having a look at gold and silver very quickly, we talked about that long-term support zone. So we saw it hold for the materials sector, and we can see how it works here. We can see this area here where it does hold, but sometimes when we get an interaction with the level, we can go through it before it does hold, and that's pretty much what we've seen over the last couple of days. Will it hold as well as it did here? Look, there's a very good chance. There's a very good chance. Don't count gold out yet. If we can get back above 1847, that's very constructive. If we can get back above 1865, I think we have held and we will go back and retest those highs. So don't write gold off yet. Silver's actually looking better. It hasn't moved through the bottom of that range. It's holding it really well. And as a sort of 3-bar pattern here, this is a very, very strong signal that demand is in the system. 25.84, 25.99, that zone there, get above that and we will retest those old highs. So silver looking better than gold, but both of them looking constructive for a continued hold of their long-term uptrends. The only other one I'll mention here in terms of the macro themes, US dollar index has broken down. That is a clean break. I've been talking about that on AusBiz for the last few times I've been on. We'll zoom out a little bit and see where it can go. I mentioned 88 was the target and 88.25 there. So that's potentially the demand point. But in the meantime, it could see our Aussie dollar move higher. And of course, the gold and silver prices will benefit from a weaker US dollar as well. Okay, let's head over to my short list of stocks for today. If I can find the watch list, there we go. First one is AFG. It's one we have covered a couple of times before. It still looks very good, and we're seeing how the price can interact with that short-term dynamic support zone. It's moved out of there very nicely. The candle's looking very good. I'm happy to go in at current levels, or if you're a little bit more conservative, you can wait for a break of 257. So that's Australian Finance Group. Next one is Aeris Resources. It's one we have featured before, 1st of September at 6.1. So if you're on that, you're doing very, very well indeed. And if you're not on it, you might want to consider buying it on a break of 8.7 cents. Wonderful short-term uptrend. Long-term uptrend now in place. That's very important as well. And otherwise, it's doing this nice high peaks, high troughs pattern from left to right up the screen. So AIS, Aeris Resources, AVA Risk Group. This one looks spectacular. Actually, this one looks very, very good. So wonderful short-term trend. It's being cradled by this dynamic support zone, breaking through the top of this little consolidation zone. And I'm going to zoom out. Is there anything holding it back? Not really until we get to the big round number of $1. So there's potentially 25% upside there. Long-term uptrend looks very, very strong. This one is Australian vintage. It is a wine producer, but don't worry, only 2% of its sales go to China. So I think it's benefiting from some of the selling in, say, Treasury Wine Estates. Investors just switching into this one. Look, hey, a little bit speculative on that basis, but can't doubt the technicals. There's a lot of demand in the system right now. Supply is not really keeping up. We're seeing rising prices. Break of 64.25 is the way to go. Look, just based on the last session's performance, this session's performance, and that big rally off the lows here, I'd be happy to go into current prices. I think that one looks really interesting. Cardno, a bit more of a turnaround play. So we've seen things like AVA, which are very, bottom, mid, left, top, right, certainly. They're well-established trends, no doubt about it. But there are a couple in today which are more establishing trends. So trends that are technically still down. We've still got a downtrend, but it is moderating. You can see there it's swung from pink to orange. That means those moving averages are converging, which means potentially they can cross and turn into an uptrend down the track. But the important thing for me is that we're now trading above that long-term, what is resistance. Hopefully now it should act as support zone. Okay, so I don't like to muck around with them while they're in the zones, but when they get above, come back, test, see some nice price action. So we've got a double hold of that zone. Then I don't mind getting involved. So this one is Cardno Limited. It's a bit of a sort of an engineering company. They do have some mining services as well. And there's a bit of a theme here with improving mining services companies and minerals companies as well. Crowd Media Holdings. I don't want to speculate on what this one does. This is ThinkTechnical. So if anything, maybe this session gives you some ideas to go back to the drawing board and research some of these companies on a fundamental basis. But we are just strictly going to stick with the technicals today. So huge move up here, 2.5 cents to 10 cents. Nice if you had it, but we're looking for where we can buy well-established trends in a pullback. And we're looking for price action at key levels to do that. And we're seeing that here. So nice push up today. I think you can peg that high as your buy point. That high is 5.4. So you could use, say, for example, an on-stop order at 5.5 cents to enter the trade. I probably wouldn't muck around with it until it proves itself, given how small it is and how speculative it is. So this is not a super fun trade, by the way, but worth your consideration. 4.4 is the support point to the downside. We do have this well-established long-term uptrend. Frontier Digital. This is beautiful, isn't it? So this is the bottom left, top right. This is the stairway to heaven. Looks very good. We've featured it a number of times in ThinkTechnical for good reason. And I think it's looking very, very good today. So maybe have another look at that one. Scali, we have featured it a couple of times as well. We're in a bit more of a consolidation phase, but I do like the price action of the last few weeks. And I think it can break. I think it can break 968 here and go through to the next leg. If we look up, I don't think we're going to see anything. So it's all blue sky from here. I'm happy to anticipate this break and go in at current levels. If you're on it from previous ThinkTechnicals, then definitely hang with it. This is a new one for ThinkTechnical, a New World Corporation. No pun intended there. But it looks quite interesting. A short-term uptrend is very well intact. We can see how it's supporting the price action as we go. We are in a well-established long-term uptrend. Break of 6.4, I think, is pretty straightforward here. If you're a little bit more aggressive, I'm happy to anticipate that break and go at current prices. NWR Holdings, ticker code NWH. This is one of those mining services companies. We have featured it before at 231, so if you are on that, you are doing very well. If you're not on it, certainly consider it. I think it still looks fantastic, and it's breaking through this 284 level today. So happy to go at current prices. This is very interesting. This is the Betashares Australian Resources Sector ETF. So this is a way, we talked about ETFs on the Shanghai Index earlier on, didn't we? This is a way to get a bit of a stake in basically the key resource stocks on the Australian market. So yes, it's going to have a bit of BHP, it's going to have a bit of Rio, it's going to have some Oz Minerals, it's going to have some Mincor, but it'll have some coal stocks as well. I think coal looks really interesting right now. I haven't put any in this. Oh, actually, I have put the next one. It's a diversified mining company, and coal is a big part of what it does, but so is aluminium and silver and a few other things. But getting back to this, coal looks really interesting, but I think it's too early to buy coal stocks right now. And I run the risk by being a little risk averse of not getting exposure to that sector if it just takes off. But by buying this, you get a little bit of that exposure as well, but you've got exposure to the best trends that are out there too. So very interesting. QRE is the ticker code there. Happy to go at current prices. South 32, as I said, some of those coal stocks looking very good. Coronado Resources and New Hope Corporation look very interesting, but I didn't put them in today. Look, How much time have we got? Not enough time. Can I get up to where I can find them? Okay, let me talk about this. Okay, so we talked before about CDD, right? So I can go back here. Okay, CDD. So this one has moved above its long-term resistance zone. It's tested, it's holding, it's going. That's what I want to see for CRN before I'm interested in getting into it. Now, unfortunately, that means it could hit 150 and pull back to 120 before it does that, and that's higher than the current price. But I don't know if it's going to get through yet. I can't say. If we go back to, say, CDD, and this is just one example, you can see where it hasn't gotten through, where that level keeps pushing it down. It is a resistance zone. So if you go in here, it's high risk. Yes, it's going to be higher reward, but it's higher risk. So what I need to see first is I want to see a move above this zone, a test of the zone, and it doesn't even have to move up. It just needs to show me a nice price action signal here, and that's where I want to get involved. So look, I mentioned these special mentions of this one, and NHC is the other one, and that's a little bit closer. I think they're going up, but as a disciplined trader, I can't buy them yet because they haven't done what I want them to do. But by buying that QRE, you get a piece of that action as well. Okay, South 32 has some coal. This one's ahead of the curve. Hey, I don't need to explain why it's ahead of the curve. I've taught you that already. It's moved above the long-term zone. It's pulling back, and we're getting a little bit of a price action signal. I want to see it do a little bit more. A break of 249 is how I would trade it. SG Fleet, hey, there we go. We're seeing all these things again. Look, it's moved through. It's pulled back. Didn't pull back all that much, and that's good too, because it tells you lots of demand in the system. But when we see it going to the next phase, that's when we get involved. This one we ran at 219, so you're ahead on that one. I would happily stick with it. If you're not in it, then certainly look at getting involved. Skycity, there you go again. Look, move above the zone. We wait. We don't go for these. They're too risky. We wait until they consolidate, they move above the zone, and they're ready to go. So that's Skycity Entertainment, SKC's a ticker code. They're happy to go at current prices, or if you're a bit more conservative, the break of 306. And the final one is Webcentral, and this is a total spec buy. It is one of those smaller stocks as well. But it's done what we want to see in terms of that long-term trend, isn't it? So it's pushed through, it's come back, it's tested, it's held, beautiful price action signal, happy to go at current prices. And here's a heads up, I think I'm going to put this in my Strawman Classic portfolio tonight. That's the competition. Ends next week. Head to the website for further details. Okay, let's finish off today by going back to the presentation and talking about where you can find further information. All of the various updates that we put out, it's in the market news section of our website. There's the link. You can follow me, all the Think Markets handles on Twitter if you like, and upcoming events. We'll have the weekly Think Tank on Monday. That's where I go over everything that happened this week and everything that might happen next week. So if you only look at the markets once a week, that's the one to look at. And then we'll have our Think Learning How to Value a Stock webinar next Wednesday. The disclaimer before I leave you today says that everything we've talked about is general advice. We are an Australian regulated broker, and we do have some products that could see you lose more than your deposit. So make sure you understand everything that's on this slide, or give us a call or consult the website for further details. It has been a pleasure to be with you today. Hopefully you got lots out of the session. All the best for your trading. Until we catch up again, bye-bye for now.